Hi, Peter. So our first podcast for the Research Center, and we're in the midst of a government shutdown where our data, which is wonderful, has increased importance because there's a void of data out there that can tell us much of anything about what's happening in the economy over the last month. And so with much anticipation, when we were waiting for our Excel spreadsheet with all the responses from our October survey that was out in the field for the whole month of October coming in and what it was going to look like as far as our headline measure of the small business economy, our Optimism index. And with great anticipation, we were aggregating all the data, putting together our index, and we were roughly the same as we were in September. So not much of a difference in our Small Business Optimism Index. However, as we were talking a bit earlier about how we were going to kind of talk about the results of this survey, that we are inching ever so closely to our 52-year average of 98. So we're 98.2. We were 98.8 before, 98.2. This gradual movement to our 52-year average, it was a bit of like, oh, okay, well, nothing much happened until we looked under the hood of our survey results and some of the questions that really stood out that we'll talk about. But that was interesting. So, we're still above the historical average. This is a great place for small businesses to be, kind of in this tumultuous time of different shifts in policy. But, above average is above average. It's an okay space to be in.
Yeah, it's quite a funny thing when you're launching a podcast and you're recording your first one that's about your big, high-quality data product, and you're like, I can't wait to tell everyone the brilliant insults. And the result is, guys, it's normal. It's okay. It is pretty much bang on average.
Absolutely.
Which is cool because the average means things are okay. They're not great. They're not terrible. They're just okay. And of course, we always want to be better than that. But, small businesses can manage these conditions.
Well, we are 0.2 of a point better than that.
You're right. Excuse me, for rounding to the nearest one. We'll have to see if we can get even closer, maybe round to the nearest 100th next month. Hopefully we'll be up. But right now we're tracking pretty much on average, but with actually quite a significant number of interesting findings, but kind of within the details, just even talking about levels. And then I think there's some really important, concerns to talk about, things to look towards in the future based on the trends of some of these numbers. Because we're with our single Optimism Index, kind of summarize everything. It says average. But the trend in that has been slightly downwards, and some of the other numbers have had quite different trends. So Start taking us through to the kind of the key numbers within the overall survey. What stood out to you once you take one layer down from just our top single Optimism Index?
Well, one of the areas that's been really interesting to look to see kind of the different ways that we evaluate the labor market. So the labor market is just in a pretzel, and it's a bit difficult to parse out what's happening because it's so kind of tumultuous when you look at different industries. It's certainly showing where we are not in the COVID years. So the high demand for labor that small business owners were dealing with years ago, that has eased quite a bit. And we were talking about this before, and you made some kind of really good points and noted some of these trends.
Yeah, I think the labor market is one where you really have to separate out levels and trends. When you look at kind of the overall labor market, we have things like hiring plans, we have open positions that you're maybe struggling to fill, compensation plans. When you look at all these, you see that the level is probably in line with kind of like mid-2010s. So that was a market where we had a slow, steady recovery from the Great Recession and had achieved kind of an okay, decent condition, nothing great, and that's where we are right now. It's okay. It's decent. It's nothing great. Generally speaking, workers are employed. There's some openings out there, not a ton. Businesses can find workers, but it's not easy because there's not a ton of workers out there unemployed on the bench. But the concern point is the trend, because conditions in 2022, so 3 years ago, were very tight, where there was tons of employers trying to hire. They were throwing money at the problem. They were spending lots of time. It was a huge headache.
A lot of money at the problem.
Right. And kind of slow and steady in a lot of our metrics, they've moved away from that. And we're now in an okay situation. And for the labor market, actually more than I would say for GDP growth, an okay situation is kind of good. You want a nice balance between workers available and new jobs. If you have way more new jobs than you have workers available, then you get inflation and the economy's overheated. And of course, if you have way more available workers than available jobs, you have unemployment, and that's bad. So this is a place where actually, okay, balance, these are good things. But the trend is pointing downwards towards getting into a situation where those available workers will really outnumber the jobs. Now, we're not there, and there's no reason to be confident we'll get to that situation. But that's sort of if I had to look at the numbers and say, what is my top concern from our data? It's that trend line. It's when are we going to pull out of this kind of 3-year general trend towards softer labor market, which was needed for the first year or two. We really needed to cool down the labor market. It was crazy. It was bonkers, unsustainable, not healthy. And now we're at a level that is healthy, and it's okay, can we stop the cooling thing and just settle in here? But, within kind of all of these metrics that are saying, okay conditions, mid-2010s as a good, historical level to compare to, there was one particular metric that was quite an outlier in the data. So we have a question we ask our small business respondents: what is the single most important problem for your business? And that can be things like taxes, inflation, regulation. And there was a big movement under the hood there related to the labor market. Tell us about that.
So that was the one that jumped off the page. It just jumped off the page because we had a huge spike in the number of respondents saying that labor quality was their single most important issue. So when you talk about these trend lines declining, and as you said, we're still in a decent space as far as the labor market conditions are for the small business sector. It's easing up for a lot of people who have been stressed over the last number of years and trying to recruit and retain employees for their business and operate efficiently. And the unemployment number, as far as we understand it from not having the latest data because of the government shutdown, but the unemployment rate is still at a very sustainable level, a comfortable level, so we haven't seen increases with that. And while we would like to see certainly the trend line plateau and not continue over the next number of months, where all of a sudden we might start thinking of kind of red flashing lights about what this might mean for the overall economy, that single most important problem that spiked was a huge number. I mean, over a quarter of our members saying that was their biggest problem in operating their business. So the two don't match up all that well. And so this was an area of, so let's start looking at industry sectors and what that looks like. And the outlier, not surprisingly, it's been an outlier for a number of years now, construction. Construction is having an incredibly difficult time finding employees to fill positions. They have enough work. They have enough contracts to keep on going and to, kind of grow the economy and do the things that they're looking to do. They just can't find enough people to fill positions. And we've heard from so many small business owners in construction about this inability to grow their business, meet demand because they can't fill these jobs. And outside of construction, there are elevated levels in transportation. We've heard of the labor shortage in transportation industry for years now, but it still continues, and also in professional services. And so the service sector a bit, transportation a bit, and the outlier is construction. And so when looking at construction, we've had a major shift in immigration policy that has contributed to the supply problem that the construction industry is dealing with. And then we also have this huge influx of construction and build out of data centers that are pulling a lot of those workers, those who have skills in the construction industry, to those projects. And that has also contributed to the issues related to small business owners trying to fill their positions. So it's, the supply part of it in two different ways are contributing to this problem. I don't see this going away anytime soon. And so small business owners are likely going to be stuck in this situation for kind of the foreseeable future. Unfortunately, the thing that would help them out, which nobody wants, is a recession where they stop building, people stop buying houses, and there isn't a demand for that because of, folks losing their job or feeling concerned about losing their job. So we don't want to solve the problem necessarily that way because that is a bad outcome for everybody. So how small business construction companies adjust moving forward to compensate for this, we'll see in the next year or so if they're able to adjust to mitigate some of these pressures that they feel in the tight labor market, especially in construction. So that was the one area of our survey results that jumped off the page. The other area that was interesting was prices. So again, we had the CPI report, so that gave us some indication that CPI is still running above what the Fed target rate is of 2%, and we're seeing that with our data too. So the net percent saying that they increase prices and the net percent that plan to increase prices in the next quarter, they've plateaued. They're in a pretty narrow band now of levels that we've seen in the last, say, 2 years but it's above trend. It's above the 52-year average. So it's still an uncomfortable space for small business owners to operate and try to absorb those higher costs and absorb them internally through more efficiencies in their business operations. And then obviously the main solution to this is to pass along those cost increases to their customers. But because small business owners have to interact with their customers themselves for the most part, that becomes a difficult conversation to have over and over again because they've been in this space for so long. But on the price environment, what did you see when you saw those numbers?
Yeah, I think there's quite interesting data that we collect, especially, we're just getting direct from business owners, not just past prices, but also what they're anticipating for the next quarter, next 3 months as well. And when you look at ours, you can really see that clear 22 inflation peak spike. And then you can see, and our data shows like a relatively fast kind of shift back to not normal inflation plans, but to sort of above trend, but not crazy. Sort of like, oh yeah, like I understand why we are above inflation's 2% target, but I also understand why we're at like 3-ish% and not 8-9 where we were in 2022.
Exactly.
And what's been, I think, a little bit odd is you see, like you said, kind of like 3-ish almost, like a little less than 3 years in this specific band, consistent with above target inflation, and that's it. Maybe if you want to squint, the possible point of concern is if you kind of break it down a little bit, you can look back about a year ago. And if you looked at that, the preceding 18 months, 2 years before a year ago, you can see like, all right, it's in a band, but maybe there's a little bit of a downward trend. And then if you look at the last 12 months, you're like, okay, it's still in that same band, but maybe a little bit of upward trend. And so it's like, we're really squinting now, but it's like, are we on an upward trend? We're still in the band, It's
We're
like
still in the band,
if you look at the 3
thankfully.
years, it's like there's not an upward trend. If you look at the last 12 months, it's a little upward trend. So that's definitely one of those, all right, excited to not like see next month's data, but all right, let's see in a quarter from now. Is that little 12-month, rise from like kind of the bottom of the band we've been in to roughly the top of the band we've been in, just more movement within the band as happens with data? Or is it sort of like a quiet signal that we should be listening to, that maybe the trend is heading in the wrong direction. That's a stay tuned for me.
Absolutely. No, I agree. Something that we'll be watching very carefully when we start receiving more data from CPI, the next CPI report, and also our data to see where these trends might be headed. The other indicator that about leapt off the page for me was our uncertainty index. So our uncertainty index fell quite a bit from September to October, and which is generally a good sign because uncertainty in itself, high uncertainty for a small business owner, is a very uncomfortable place to be. They're not confident about making big decisions moving forward in business operations, whether they should make a big investment in capital spending in their business, what that looks like. And so while it's an uncomfortable space to be, lowered uncertainty is good, but there's kind of a positive angle and a negative angle to this. And we've seen it both ways over the course of the last, since COVID, last 5 years. But this last decline in uncertainty was of the negative trend. And so that was a bit concerning to me, where we saw this shift from more saying that they thought things were going to get worse than they didn't know from September to October. And so from the don't know to the negative response, there was this shift that lowered our uncertainty, but wasn't in a positive direction. And so that's another area that I think is of concern, that we'll look to see whether this is a one-off or if this turns into a larger trend.
Yeah. And I think, an important point for folks to understand about the way we measure uncertainty is that it's a little different from the, I think, most popular way that you hear about uncertainty in maybe like the financial press.
Very true.
When they're talking about uncertainty, they're usually talking about the volatility index, VIX, which speaks to kind of how rapidly stock prices are changing. And that's volatility. That's also uncertainty, but it's a little bit of a distinct factor. And so that's something that increases when times are bad. And our uncertainty is a little bit more of like a true uncertainty, where it's like the needle is neither pointing good nor bad. It's quite literally a kind of amalgamation of folks saying don't know on a handful of our most important questions. So it's something to be seen as kind of a sign of a holding pattern, of a wait and see, of I'm not optimistic and I'm not getting ready to like throw a ton of money at a capital expenditure, but I'm also not suffering and, terrified of failure. I really don't know. And so to give an example of a very high moment, this time last year was right before a presidential election, and you saw very high uncertainty. And it wasn't that this time last year was a terrible economy. It was that this time last year was a moment where you did not know which way the wind was going to be blowing in a short period of time. So again, like survey
yeah.
like October, you're probably listening to this in November after the election, but it was like when you're talking in October, you're a pre-election moment, it's very uncertain. And that's kind of a NFIB and small business way of looking at uncertainty, and it's a little bit different, important to keep in mind than that financial market uncertainty, which is really truly volatility. It's a fair uncertainty metric. I'm not taking away from that one, just drawing a distinction between our metric, which is going to be low in like a great recession because everyone knows it's bad.
Exactly.
And low in a boom time, but in an okay time with some, policy upheaval, maybe some uncertainty about changes in the pipeline, then we see
where
high
consumer
uncertainty.
spending might be going.
Exactly.
Those trends.
Yeah. And tell us too about, you said we saw a substantial decrease in uncertainty. That's the month-to-month change. What about the level? Like, where are we compared to the historic average?
We're still elevated. So uncertainty is still elevated compared to what the 52-year average shows. And that, again, is because of a lot of the kind of economic conditions that have been swinging quite a bit over the last 6 years, or 5 years specifically. But, as you mentioned, whether it's elections, not knowing what tax or regulatory policy is going to look like, whether it's going to be more favorable for business owners to operate or less favorable for them to operate. All that makes a difference for a small business owner since they have to navigate all this themselves. And then just these huge shifts in economic conditions that they've had to deal with have just elevated the level of uncertainty over the last number of years. So we're still above that average, but we did drop quite a bit from September to October. So whether this, again, is a one-off or a larger trend will be confirmed in kind of subsequent datas or surveys that we release, and we'll see where this goes. It's jumped around quite a bit over the last number of years, but this was one of the more notable drops in it. We also introduced a number of months ago comments that small business owners can write in and just tell us what's on their mind about their business, the conditions in which they're operating their business. And I didn't know how this was going to go, whether we were going to get 5 comments from our members, whether after they filled out the survey, whether they were like, okay, I really need to get back to my business and do the thing that I'm here to do, or if they were interested in telling us more about their situation personally. Come to find out, they are very interested, a lot of them, and we really appreciate all the comments that our members are sending back to us, giving us more in-depth detail about what's on their mind, what challenges that they face, what type of environment they're having to operate in. And this last month in October, we received a lot of comments that spanned the gamut of issues that we know are of concern to small businesses. But those that were, kind of more prominent or stood out to me, increased cost of health insurance. So that we know is a huge problem for small business owners. This could be because it's right in front of their face when open enrollment time and knowing what those premium increases look like next year. Certainly a concern for a lot of small business owners still, in that they're still trying to navigate what this means for them because of the continuing conversation around the levels of tariffs on certain countries, on certain products, and where that might settle. Hopefully that will, as we move into the end of this year into next year, some of those trade policy negotiations will be more settled, and so they will better understand what they need to do to kind of navigate the tariffs if they're impacted in securing supplies and inventories and things like that. We did receive a number of comments on that. And then also interest rates still. So while the Fed has now cut interest rates a few times and projected to cut a few more, it takes a while to filter through the financial markets and get down to the level of small business loans and how much they're paying in financing costs. And so for a lot of small business owners, financing costs are still relatively high and expensive, and another cost input that they're having to navigate. So those were kind of the main buckets that I saw. Of course, there were a number of regulatory comments and tax comments, specifically in some of those higher regulatory tax states. And then ag issues related to ag prices, soybeans, those type of commodities, where small business owners in farming have some challenges there. But those were the kind of the main buckets. Did you see anything else?
Well, one thing really stood out to me. So for background, folks, Holly was sorting through this with another person at NFIB who's key to making this survey happen, Maddie, and they were working in one of our conference rooms, a big conference room table. And I walk in, and it's this enormous explosion of papers. They've been reading through every single comment and sorting them into like the relevant buckets. Just trying to be like organized to say like, okay, where are we getting things? And you can see sort of like graphically through stack height, what are the most important ones. And it is what, Holly mentioned. It's insurance, it's tariffs, it's interest rates.
Labor, forgot labor.
Labor. Yeah, you could see like just a handful of tall stacks. But one thing that really stood out to me, it was just the number of stacks.
Very true.
You're not sorting into like, oh, here are the 6 problems that small businesses have. You're like, man, I'm struggling to break this up into 20 categories because it's idiosyncratic. I mean, the diversity of small businesses, but I think it's also a reflection of the kind of like relatively okayness of the economy right now. There's not some universal thorn in the side of every small business. There's people who are trying to finance, trying to do a capital expenditure, and those higher interest rates are a pain in their butt. There's people who are importing things affected by tariffs. There's people who are trying to hire a lot and they're frustrated by labor markets. But it's not one thing. And I think that's something that's really important for economists and observers to keep in mind. It's that diversity, and it's the reality that right now we're in a relative balance situation where there are a slate of challenges, but when you kind of open up the floor, you realize that there's not the one huge smoking gun that's by far the biggest. There's people on a lot of different sides of a lot of different really detailed business-oriented difficulties. So that's one thing that really stood out to me, just the diversity. You try to organize that, and it is a big challenge because there's a lot of different problems when you open up the floor and say, the floor is yours. What's affecting your business?
Yes, I mean, so true. There's just a huge litany of challenges that small business owners face, and the gravity of those challenges just shift over time. And so, as you said, it's not a kind of a monolith. There's not one challenge that dominates all small business owners. Certainly taxes and regulations. Those are going to be kind of the universal thorn in their side for a lot of small business owners. But when you get past that and they're talking about and sending us comments on specific things, it really does run the gamut of the challenges that they face, whether it's geographically, whether it's a specific state that has their own unique challenges, whether it's the industry and their challenges, whether it's the size of business and those specific challenges. So yes, it was a table filled with lots of stacks of paper, but it was really helpful to read through those comments. And many of them were extensive and detailed, and we appreciate everybody who sends in those comments because it gives us a better understanding of those unique challenges that face our members and the universal small business population out there and how difficult it is. So those were the takeaways for the month of October. And when looking forward and thinking about, what areas are you going to look for or zero in on the November survey when we get that in a few weeks, kind of jumping forward again, what are you looking for?
Yeah, for me, I'm really going to be keeping a close eye on the labor market. And that's two parts. One is that long-term softening trend that I'm really wanting to see flatten out and get us into a nice, comfortable equilibrium, everything in balance, everyone, getting the jobs they want and getting the workers they want, and we're all happy. That's maybe a little bit less of just a pure watching next November. It's maybe watching next quarter and throughout next year, right? Because that's a long-term trend, and 1 month is not going to totally flip the script of the data. But definitely, I'd say one to watch for. And then the two to watch for on labor is that sudden kind of substantial movement on labor quality as single most important problem. You explained to us how, under the hood, construction is a big part of the story. We know that immigration and data centers are probably, input components of that. But it's a little odd to see, whoa, October, all of a sudden, significant movement on that. I don't know what happened in October that is so different from September. I really want to see November's month. I want November's month today.
No kidding. Me too.
So that we can really see, is that, a new normal? Or is that a little bit of that statistical movement? There's no dismissing that, okay, clearly labor quality, I've adjusted my priors. I now think labor quality is something to keep a closer eye on, but is it the new October level? Is it closer to the older, lower September level? That's what I'm going to be really keeping an eye on in November specifically. What about you? What's kind of your what to watch for with next month's data?
For me, it's inflation. So as you mentioned, we're looking at this narrow band above the historical average over the last number of years, but your analogy was perfect in that squinting really hard, you can see that over the last number of months, there is this upward trend. And if that continues, if that gets outside of the band, if this is something that we're going to see as single most important problem, more members saying that that is their biggest issue in operating their business, hopefully not. Hopefully that stays within the band and at least doesn't turn into a bigger problem because we know how uncomfortable that is for small business owners. But that's where I'll be looking for the November data. So until then, hopefully we'll see some more data from the federal government come out to see where we are, kind of big picture. But this was a great insight for the small business sector and the small business economy, and we're thrilled to have this data available to us to better understand a huge sector of the U.S. economy.
And by the way, folks, it's available for free on our website. You can dive in as well. So if you're feeling starved for data, don't just have to get it from the podcast and the press release. You can get into it yourself. So come on, check it out.
Join us for our next podcast, which will highlight the industry report of the October Small Business Economic Trends data, and we'll dive into more details about what's happening in those larger industry sectors, construction, services, retail, and manufacturing, and we'll see where they are compared to the overall general population of small businesses. So look forward to that episode by NFIB Research Center, Small Business by the Numbers podcast.